Disclaimer, this video is for educational purposes only and should not be considered financial advice. Please do your own research and consult with a financial advisor before making any financial decisions. Good morning. Today I wanted to talk about a specific option trade that I am thinking about purchasing. I'm looking at buying an option on MO, which is also Altria Group. They used to be Philip Morris. When they split up, they became Altria. The expiration date that I'm looking at is a July 17th, 2025. So it's going to give me plenty of time, just over 375 days if I decide to go forward with it at a strike price of about, specifically at 42.50. So here is just a daily chart on Altria without any markings. I'll bring in my support and resistance lines, and here this indicates the strike price if I purchase this at $160, which would be an additional $1.60 per contract, approximately where my break even would be, and then profit zone to give myself an idea of where this stock would have to move before it actually made a significant profit with the option. Because of the distance that it would have to move, that's the reason that I am looking at such a long-term option. Like I said, I think the 17th of, I've got that's 24. I've got that a month early. There we go. Let's move that out then to the correct date. That's when it would expire right there. So it gives me that amount of time for Altria to basically reverse and go back up into an area that it would be profitable. I own Altria in my other account and have been trying to purchase it in an additional account. Generally speaking, I would be looking at selling an option here, but the option premiums just are not paying what I would like to put that trade on. So I'm looking at it from the reverse perspective, which is, well, if they're not going to pay me enough to hold the option, I might as well look at buying an option and seeing if that might work out. My issue with buying options is that there is such a distance that has to be traversed by the shares before it actually makes a lot of sense. But with the distance and time, this also could work out. Just briefly on a fundamental standpoint, I also like Altria, which is part of the reason I hold it. It's got a great dividend. Its price to earning ratio is very low. It has a nice profit margin, net margin, I should say, and nobody else likes it. So when everybody's done selling, the price has to kind of drift up. So if I bring in my stochastics, MACD, the squeeze, you can see we've definitely had divergence for a while. It's indicated. Generally speaking, I like to play off divergence to try and see if we can pick a bottom effectively. Even the squeeze is starting to turn around a little bit. Unfortunately, it looks like Altria has had a massive move today while I was trying to kind of analyze and set this video up. So I can no longer purchase these options at $160. Is going to cost me more, along the lines of $185 to $190, which just means that it's kind of outside of the range that I want to even consider. So I won't be taking this trade today. However, it is something I'm going to continue to watch, and if anything does set up, I will let you know.